Let's start over in the US. Yesterday we had that ADP jobs data report saying that they lost less jobs than before, which is supposed to be a good thing, but not good enough for the markets. And we also, of course, have the non-farm payrolls coming out on Friday, and the expectation of that is that 5,000 jobs were added to non-farm payrolls after a loss of 85,000 in December. What do you think is going to happen on Friday, and do you think is going to move the markets?
Look, I certainly hope that we get exactly what you're talking about, a kind of relatively negative, a relatively neutral type of situation on the jobs front. But I think that may be a little bit ambitious. We need to get a sustained recovery in jobs. We need to see jobs being created. We need to see that 10% plus unemployment rate coming down before we can honestly put our hands on our heart and say this is an economy and recovery that's got legs on it, that's going to be sustained.
Because 70% is the consumer.
Well, exactly. And the consumer really, it's about consumer confidence there as it is here. I think there is a growing consumer confidence in the US. It's starting to get better, but it's taking an awfully long time. When you've been through the kind of crash that they've had, in the real estate market, in the financial markets, in the broader economy generally, it will take time for that confidence to return. But hopefully we're going to start seeing that. Look, as I say, hopefully we're going to get that kind of result, but I think it might be a little bit ambitious.
I agree, actually. If we then bring it back to South Africa, news out yesterday, Pioneer Foods have been slapped with a 195 million rand fine by the Competition Tribunal, who found them guilty. What is your take on the situation, and what do you think is the impact going to be on the share price?
Well, if we start with the share price first of all, it actually rose slightly yesterday, which seemed a little bit ironic. I guess a lot of observers had factored this in. In fact, a lot of them had probably factored in a much higher fine, because theoretically at least, the tribunal could have taken a much more severe view. They could have fined up to 10% of their group income had they deemed it necessary, which would have been around about R1 billion. In fact, it was 196 million, which I think is one of the largest fines, both percentage-wise and in nominal terms, that the tribunals ever slapped down. So I think the market had already factored that in, and they've got a lot of cash lying around. It's not going to affect them dramatically. But I think of more import may be the reputational damage associated with this. I've been to a number of the presentations in Pioneer Foods over the past couple of years, and when you asked management about it, they were very blasé. That's the only way I can put it. They said, well, it's really not a big issue to us, and we're going to fight it, and we're not guilty. They were adamant about not being guilty and not being part of this cartel.
Although the other three parties pointed to them saying that they are guilty and they were involved.
Indeed. And I think it's bad that one of the senior managers was actually highlighted in the Competition Tribunal report as having lied under oath. Now, that isn't good. That's
definitely not good.
Yeah. So it's from a reputational point of view, I don't think it's great. From a pure rands and cents point of view, it's not going to make a huge amount of difference to them. And I think in many ways, investors will see look at this. It is a well-run company. They've got great brands. This is now largely out of the way. But mud does stick to a certain extent, and it's stuck with Tiger Brands, for example, after their revelations. So other than the reputational damage, I don't think it's going to be too much of a problem for Pioneer.
One of our market commentators said in one of last night's shows, he also did say that he thought that what the shareholders appreciating at the moment, and that's why the share price wasn't affected so huge, is that they now have certainty. Yes. There's now an amount set on it. This is how much it's going to be. Yes. And as you mentioned before, their cash reserves, they have quite a big cash float. So it shouldn't be that big a deal to them. Yeah,
and as I say, it could have been an awful lot worse. It's pretty bad, almost 200 million, but it could have been close to $1 billion.
Yeah. And then if we take a look at the South African equity market, what do you think of the equity market at the moment? In an interview you had on the show about a month ago, I think you said that it was a good time to sit back and survey the landscape. What do you think at the moment? Still sitting back surveying the landscape, or are you getting in there?
Yeah, excuse me. I think it probably is still time to sit in one's hands to a certain extent. We're seeing the market at around about 16.5 times PE, which historically is on the high side, no doubt about it. I think investors have anticipated, both here and abroad, a profound improvement in economies and have bought the market accordingly. Now we're sitting on, as I say, a historically relatively high market. it's probably time to, if you must get into the market, I think it's got to be pretty specific. You've got to be doing your homework to a far greater extent than you did last year. Last year was much easier, although it might not have seemed so at the time, because you could have bought the market. You could have bought a Satrix, for example, and you've done exceptionally well. I don't think that is necessarily going to be the case this time around.
It's much more stock pickers market.
Exactly, a more stock pick specific type of market.
Speaking of stock picks, any stock picks that you would like to share with us?
Well, look, I think we're still looking very much at the resources counters, certainly for the next 6 months. I think while the dollar is probably going to stay relatively subdued, then I think it gives scope for the commodities sector around the world to actually do well. And we'd be looking at the likes of Kumba iron ore, for example, and the heavy base metal type producers. On the industrial front, it's difficult because it's a real mixed bag. At this point in time, one should theoretically be looking at something like the credit retailers, for example. But unfortunately, the consumer is still very much down and out. And I think if one must be in the retail space, we actually prefer to be in the defensive stock still, the likes of Pick n Pay, ShopRite, Spar, Clicks, that type of thing.